people talk about the stock market in the United States, they're usually referring to three major indexes. These are the S&P 500, the Nasdaq Composite, and the Dow Jones Industrial Average. Each index represents a different slice of the market, and together they give us a broad view of how the economy is performing. The S&P 500 tracks 500 of the largest companies, the Nasdaq focuses on technology, and the Dow Jones covers 30 blue-chip giants. Understanding these indexes is the first step to making sense of daily market headlines and trends. Start with the S&P 500. This index is often seen as the best representation of the overall U.S. stock market. It includes 500 of the largest companies, spanning various industries from technology to healthcare to consumer goods. Because of its broad coverage, the S&P 500 is a go-to benchmark for investors and analysts who want to gauge the health of the market. When you hear that the market is up or down, people are often referring to the S&P 500's movement. Next up is the Nasdaq Composite. This index is known for its heavy weighting toward technology companies. Think of giants like Apple, Microsoft, and Google's parent company Alphabet. Because tech stocks are such a big part of the Nasdaq, its performance often signals how the technology sector is doing. If you see the Nasdaq surging, it's usually because tech companies are having a good day. This makes the Nasdaq a favorite for those interested in innovation and the future of business. Dow Jones Industrial Average is one of the oldest and most watched indexes in the world. It tracks just 30 large established companies, often called blue-chip stocks. These companies are leaders in their industries and have a long history of stability and performance. The Dow is a bit different from the other indexes because it's price-weighted, meaning higher-priced stocks have more influence. Investors and analysts keep a close eye on the Dow for signals about the health of America's corporate giant. This particular Monday, both the S&P 500 and the Nasdaq Composite traded around the flat line. In other words, there wasn't much movement up or down. Investors seem to be in a holding pattern, not eager to buy or sell. This kind of market behavior often happens when big events are on the horizon and everyone is waiting to see what will happen next. It's a moment of collective pause where the market is holding its breath. While the S&P 500 and Nasdaq stayed steady, the Dow Jones Industrial Average told a different story. It fell by 231 points, which is about a 0.5% decline. That might not sound huge, but in the world of stocks, a single-day drop of over 200 points is significant. This decline was especially notable given the uncertainty in the Middle East and rising oil prices, which were weighing heavily on investor sentiment. Main reasons behind the Dow's decline were concerns about energy costs and geopolitical instability. Rising oil prices can increase costs for businesses and consumers, which in turn can slow down economic growth. At the same time, tensions in the Middle East create uncertainty, making investors nervous about what might happen next. These factors combined to put downward pressure on the Dow, even as other parts of the market held steady. But what was the overall picture for the stock market on Monday? It was a day of caution and mixed signals. Technology stocks led by companies like Nvidia were helping to pull the market higher. But at the same time, worries about energy and geopolitics were dragging certain sectors down. These opposing forces largely canceled each other out in the broader indexes, leaving the market in a kind of balance. Summary: the U.S. stock market started the week with a cautious tone. The S&P 500 and Nasdaq Composite remained steady, while the Dow Jones felt the pressure from global uncertainties and rising energy costs. Investors are watching closely to see how these factors will play out in the coming days. As always, the market is a complex mix of optimism and concern, with different forces pushing and pulling in real time.